Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. Precious metals crash accelerates on Warsh nomination. 2. India budget triggers market rout with STT hike. 3. Warsh Fed nomination jolts dollar and rate expectations. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. Precious metals crash accelerates on Warsh nomination. Primary asset classes impacted: gold, silver, platinum, palladium, mining equities, FTSE All-Share Resources, NYSE Arca Gold Miners, commodity currencies, AUD/USD, ZR, CAD, real yields and inflation break-evens. What happened? Gold plummeted 11% Friday to $5,009 per ounce, worst single-day drop since 2013, while silver crashed 31% below $99, steepest decline since 1980 following Trump's nomination of Kevin Warsh as next Fed chair. Weekend futures extended losses with silver down another 12% and gold falling 7%. Why it matters. The violent reversal confirms speculative excess drove parabolic rallies rather than durable demand, as Warsh's hawkish credentials triggered profit-taking across precious metals positioning. Markets interpret nomination as validating Fed independence and sustained higher-for-longer rates, strengthening dollar and eliminating tailwinds that propelled metals 65% in 2025. The crash forces reassessment of inflation hedges and commodity allocations while pressuring mining equities, metal ETFs, and resource exporter currencies. Key numbers to remember. Gold fell $700 from Thursday, record $5,608 to Friday, close $5,009. Silver crashed from $120 to $99. Dollar index surged 0.9% Friday to 97.09, largest gain since May. 10-year Treasury yield rose 4 basis points to 4.27%. Precious metals ETFs collapsed. SBI Silver ETF down 22%. Nippon Gold ETF fell 10%. Fresnillo dropped 7% in London. What to watch next? Markets will monitor whether metals stabilize or extend losses as positioning unwinds and dollar strength persists. Continued sell-off would pressure mining equities globally, commodity-linked currencies and inflation expectations while validating hawkish Fed trajectory. Alternatively, geopolitical tensions or persistent inflation could revive safe haven demand. Key test arrives with U.S. non-farm payrolls Friday and any Warsh Senate hearing comments on inflation targets and central bank independence. 2. India budget triggers market rout with STT hike. Primary asset classes impacted: Indian equities, Sensex Nifty 50, derivatives volumes and liquidity, brokerage and exchange stocks, Zerodha ecosystem, Indian rupees and Indian sovereign bonds. What happened? Finance Minister Sitharaman announced securities transaction tax increases Saturday, raising STT on futures to 0.05% from 0.02% and options to 0.15% from 0.10%. Sensex crashed 1,547 points, or 1.88% to 80,723, while Nifty plunged 495 points, or 1.96% to 24,825, largest budget day decline in 6 years. Why it matters. The STT hike directly targets India's explosive derivatives growth that generated projected 78,000 crore rupees fiscal 2026 revenue, with actual collections falling to 52,000 crore as volumes slowed. Higher costs will compress retail trading activity, reduce brokerage revenues, and dampen liquidity in derivatives markets central to Indian equity structure. The move signals government prioritizes revenue generation over market depth, potentially driving traders offshore while pressuring exchange operators and fintech platforms. Key numbers to remember. STT on futures jumped 150% to 0.05%. Options rose 50% to 0.15%, second major hike in 2 years. Sensex fell 1,547 points to 80,723. Nifty dropped 495 to 24,825. Turnover remained above 300 billion rupees despite sell-off. Fiscal 2026, STT collections projected 78,000 crore, but tracking only 57,000 crore through January, reflecting 27% shortfall. What to watch next? Markets will assess whether STT increases permanently, reduce derivatives participation, or trigger temporary volatility before stabilizing. Sustained volume declines would pressure brokerage stocks, exchange revenues, and fintech valuations while reducing market liquidity. Conversely, if turnover stabilizes above 300 billion rupees, traders may absorb higher costs and Sensex could recover. Key catalysts include February derivatives expiry volumes, retail participation metrics, and any regulatory clarifications on implementation timing. 3. Warsh Fed nomination jolts dollar and rate expectations. Primary asset classes impacted. US dollar, DXY, EUR/USD, USD/JPY. US Treasuries across curve, 2Y, 10Y, 30Y. S&P 500 and Nasdaq futures, EM currencies and bonds. What happened? President Trump formally nominated Kevin Warsh as next Federal Reserve Chair Friday, selecting the former Fed governor and inflation hawk over dovish alternatives. Dollar index surged 0.9% to 97.09, while S&P 500 fell 0.4% and Nasdaq dropped 0.9%. Treasury 10-year yield climbed 4 basis points to 4.27%. Why it matters. Warsh's selection signals potential regime shift at Fed prioritizing inflation credibility and balance sheet discipline over dovish accommodation. His hawkish credentials from 2008 financial crisis suggest higher for longer rate path and reduced quantitative easing, strengthening dollar while pressuring risk assets and emerging markets. The nomination alleviates some political independence fears but raises uncertainty over forward guidance style. Markets face adjustment period parsing Warsh's actual policy stance versus campaign rhetoric as Senate confirmation nears. Key numbers to remember. Dollar index jumped 0.9% Friday to 97.09, largest gain since May. EUR/USD fell to 1.194, while USD/JPY tested 154. S&P 500 declined 30 points to 6,939. Nasdaq fell 223 points to 23,462. January finished positive with S&P up 1.4%. Treasury 10-year yield rose to 4.27%, 2-year at 3.56%. Curve bear steepened as front-end priced slower cuts. What to watch next? Senate confirmation hearings will probe Warsh's views on Fed independence, inflation targets, and balance sheet strategy, with markets scrutinizing signals on rate path and political influence tolerance. Dovish comments would reverse dollar gains and support risk assets, while hawkish rhetoric reinforces higher for longer trajectory pressuring equities. U.S. non-farm payrolls Friday and upcoming Fed speakers will clarify current committee thinking before Warsh takes chair in May. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.